Hi, fellow traders. I hope you guys are having a great weekend. I wanted to take this time out to kind of talk about my swing trading. I've been getting a lot of questions about my swing trading service and what I do and how I do it. So I want to answer the questions. I want to do it all at one time. You know, what I do is unique. It's different than what anybody else does. So I think I need to kind of run through it with you. So I want to take this time today in order to run through it. But before we get too deep into this, I want you to check out this disclaimer. I'm not going to read through it. You can pause it and read through it all if you want to, but I just want to point out that I am not a investment advisor. I'm not a registered broker, so I'm not going to give you specific investment advice on any stock or security or anything like that. I'm educating you on the type trading that I do. So this is short-term swing trading. It's not investing. And what I'm doing is I'm sharing with you what I do, my process, my strategies, so that you could look at them and figure out, is this something that you want to do, that you could do on your own, that you see what I do, you can connect with it. Because trading is a really, really intimate thing. And it looks different to everybody. And what I do may not fit your personality, your style, or whatever. So I think that's why everybody teaches their own thing. So like I said, I do it a little differently. So, I want to share with you guys exactly what I do. So what we're going to talk about today is what my definition of swing trading is. It's a quick definition of what I believe it is, why I think we need to do it, why I think it was a good addition, or it is a good addition to you trading, and then just talk about my strategies and then how the service works. So you have a good idea, a good view, and a broad idea of what I actually do. All right, so let me minimize my ugly face here. All right, so for me, this is my definition. Swing trading is the art and science of profiting from a stock's short-term price movements, from a few days to a few weeks. Some people consider 1 or 2 months the max, but for me, I'm only looking at a couple of days to 1 to 2 weeks. No more than 2 weeks do I want to hold something. Have I done it in the past? Yeah, because I haven't had anything else going. But definitely, if other stocks are setting up and things are looking good, I'm not going to sit there and hold something that's been stagnant for a couple of weeks. So I use technical analysis for my main basic strategies. Now I do use the fundamental analysis for my earnings trades, but that's a second tier type strategy. It's something that I'll share with people who have shown the ability to handle these mechanical, technical trading strategies, because you have to be disciplined. You have to be able to do things the right way. So, even though swing trading can be a mix of technical and fundamental analysis, I stick to teaching you the technical strategies. The technical analysis, it makes it simple, straightforward, and easy to manage. Once you get that down and once you become really comfortable and really disciplined in what you do, then you can start getting into some of the more intuitive trading. But you can't make that move until you prove to yourself that you're disciplined enough to handle the basic technical, mechanical strategies. So that's why I start where I start. So the goal is to capture large price movements that you can't really get in one day. Now, yes, sometimes we do get a day trading stock that just makes these huge moves, but we don't see that all the time. But in swing trading, we're looking to catch larger moves over multiple days. So it's possible to make more money on one swing trade than you do on all of your day trades in a given week. And that happens a lot. As you've seen, if you followed me long enough and you followed along with the day trading and the swing trading in the community, you see there's a lot of times where I can close out a swing trade that I've been in for 7 or 8 days, and it's made more money than my day trading the whole week. I mean, that's just the way swing trading is. So it's why swing trading? It's easier to manage swing trades. It's easy to learn how to execute. It's easy to learn these basic fundamental strategies and execute them. If they're the technical analysis and the mechanical type strategies. The commissions are cheaper if you're trading with the broker that you have to pay commissions on. Even with a zero commission broker like TD Ameritrade that I trade with, I still have to pay, some small SEC fees and stuff. But that's basically pennies. But if you do pay commissions, it does save you on commissions. You have more time to analyze and plan the trade. You don't manage the trade tick by tick intraday. That's a no-no. And I'll show you why in a minute when we look at some charts. But it's a lot less stressful. Those of you that day trade, that can be tiring and stressful. But we love it. I mean, I day trade because I love it. And I love that excitement that it brings. But yeah, would it be smarter for me to swing trade? Probably. But day trading is just my thing. And maybe my kryptonite. I don't know. But again, typically you're going to make more money per trade than you would swing trading because you're holding longer and you're looking for these larger moves. So the way I look at it, and this is the anatomy of any trade, I'm going to scan first. And I have my scan sessions on Sunday mornings. We do a market analysis and swing trade watch list session build. If you've been on my website on the swing trade page, you see there's a link to the video from that particular Sunday morning. If you ever want to check it out. But that's where I do my scanning. And then once I scan, I get the stocks that I want, and then I build trade plans for them. Those are the plans that I tweet out to you guys on Sunday nights and every day as they're needed. And then I just execute the trades. And then you see I send out the executions to you. We'll talk more about that here toward the end. And then I reflect on those trades just like I do day trading. So to finish up, we do reflect and we do analyze the trade. So the first strategy that I want to share with you, now I haven't done this at all for months. I take that back. I tried it once a couple months ago and lost on it because I was forcing it. And I took one trade this past week. And I'm going to show you that in a minute. But this is a strategy that just hasn't set up because this market has just been too strong. And even stocks that have bad news and get hit, they never set up. Technically, they never really set up for this strategy. And you might have seen this before. I can't remember who I picked this up from. But it's called the Oversold hook because typically we look for a stock that falls straight down. And then it starts to slow down and as it starts to pick back up, some buyers, we get dip buyers, and we get people that are looking that says, hey, this fell too far too fast. Oftentimes it's had a bad catalyst. The market overreacts. We retail traders tend to overreact a lot, and it just sells off until it finds support. And you get somebody that's ready to start buying off of that support level. So I look for stocks that have bad earnings, bad news, sector pullbacks, panic selling, and they need to have a history of bouncing after a big sell-off. So what this does is, once it hits the bottom, we look for the entry trigger, which is the same for all of my strategies. We look for a candle to open above the previous day's close, and we're in. It triggers an entry, and then we start looking to take profit. So here's SRPT. This is one we had the huge gap down. I know you guys heard about this. This stock lost half its value overnight. This isn't typical. So if it was holding up, I was going to look to trade this. So I waited and I gave it time to sort itself out. Once it proved to me that we found support, I got in, and I'm looking for it to complete that hook. Now, yeah, this part is missing. You can draw an imaginary line down here, and we're starting to hook up. We did get a pullback. I was able to take profit here. We did get a little pullback here, and this week I'm looking for it to run up to the next target, and then potentially 110. You'll see how much we can take out. But we've already locked in some money on this. But this is an example. And like I said, this strategy hasn't been in play for months. It just hasn't, because the market has just been too strong. The bull market recovery really prevents a lot of these stocks from selling off. Now, let's see if we can look at FanViz. There's a couple of stocks today that I'm going to share with you real quick. Pulling the scanner up here. Just give me 1 second. Alright, so there's a couple that's starting to set up. Now my scan, I look for them to be under 20, and that's when they come into play for me. But you want to catch these a little bit early. So like Colgate, Palmolive, this is starting to sell off. I'm looking for it to continue. A couple more candles down like this, and maybe I can catch the reversal on it. Now, if it starts to turn here, it's too soon. We haven't stretched out enough, and it'll do just what Twitter did last week. Twitter was on our watch last week because I was looking for it to continue to sell off. It didn't. There's not a whole lot of room here to recover. So this never completed the setup. So that's kind of the issue on that. Now this screener is, and what I teach you how to screen on FanViz is free. Now I pay for the elite, but you don't have to. But it is free, and you could do this for free. You don't have to pay for anything to scan like this. So CLPG, this is the other one we've got on watch. Looking for it to stretch out a little bit more. Maybe find support here around 125. This is what I'm looking for. If we can get to 125 in the next 2 days, I'm going to look to bounce it. So I'll be looking for it to turn around. So we'll just be waiting on these. There's no setup yet. We're just watching these so that we can be ready when the time comes. So the next strategy I have is a 52-week high. And what I do is I scan for stocks making their 52-week high. I look to see if the stock has made a 52-week high and a pullback within the last 2 weeks. And then I wait for the entry trigger. I don't want a fresh 52-week high breakout. If I get a fresh one, it's probably going to come back, because we all know, if you haven't learned yet, and I know a lot of people teach new retail traders to buy the breakout. You can't, if you buy the fresh breakout, it's probably not going to work. So you really need to get a secondary one. So like here was the first one, and then we tried to break it again. We missed it by a couple of cents, but we got a pullback to support. So this time when we broke the 52-week high, we knew it would run, and that's exactly what it's doing now. So I'm always looking for ones that are not making a new high after a big run up, because more than likely that's going to pull back, and it'll probably set up later in the week. So here's MU. This is one that, okay, here was a 52-week high here. We had a pullback. It tried to make it again, but it didn't quite do it. It pulled back to support. Here was the 20 EMA cross. It really wasn't a whole lot of room up to the 52-week high on this. So we waited for it to trigger. It triggered, and this is a prime example of why you don't watch intraday price action on your swing trades. So I get in, and it sells off that day. So a lot of people that got in this with me actually sold and bailed out and did not let the stock, confirm that it's going back down. We just had some profit taking. And this does happen sometimes. But then look what happened the next day. And then we eventually got to our first target. It did pull back because it had earnings. It did come back and stop us out at break even. But look, for 4 days, we picked up just over $3,000. And this is a strategy. This is how you want to trade the 52-week high strategy. I'm not looking, if this was the fresh break and we didn't make this over here, then I'm not going to trade it. I'm going to pass it off, and we're going to look at another stock. So that's the MU. So the last one I use is a 20 moving average crossover. And I'm looking for stocks that are breaking above its 20 SMA. And ideally you want a stock that is traded above, falling back below, or back to the 20 SMA. Then, you want to see it trade back above it or bounce off the 20 SMA. So let me go back. And I'm sorry, I forgot to bring up the scanner. So let's go back real quick to the 52-week high, just to kind of show you what I'm looking for. Like Apple. Ideal right here. Okay, 52-week high made right here. We pull back. I know it's outside of 2 weeks. It hasn't been that long. So this is definitely on my watch for this week. So right off the bat, I see this. But then I see a stock like this gapped all the way up. No. Here's another one that just doesn't seem like it has any price action going for it right now. But look at what it did here. Things look kind of slow and dead, and then we had this explosive move up. This is perfect. All right, so this is on our watch. So, and that's basically what I do is I just go through and I could see, okay, this one's already broken out. It's too far. This one's already gone. It's too far for me to get. This one is, this is an ugly chart if I ever seen one. And I could just quickly go through. And when I see a chart I like, I pull it out. And there it is. Okay, so here's a 20. I'm moving out a crossover. This is, I'm looking for stocks that have broken, let's say they're 20, and they have enough room for me to take profit. Like here, if this triggered and I got in at 95, there's not enough room for me. There's only $3 until it hits this ascending resistance. Look at what it's done every time it hit this. It's pulled back. So why would I expect it to go through? So I would definitely want to take profit here, at least 2/3 off before it goes. But if it doesn't make sense, if I have to get in at 95 and my stop is going to be back here below the support under the 20 here, and let's say it's at 91, it doesn't make sense that I've got to give it $4 to make $3. I would need to make $8 to $10 for this thing to make sense. So, here it just doesn't make sense, so I can't trade it. And those are the things that we look for, that we go through every Sunday morning when we're going through our scan. And I do it live, so you guys, if you have questions, you're able to stop and ask me questions about any stock that we're looking at, why I don't like this stock, why does this one look good. And it helps you look at the stocks for yourself. And that's the whole point of this, is you learning what I do by watching me do it, and then you take it and you add your own twist to it, and you become your own trader. So Chewy, this is one from the first week of the month. And here was a 20 EMA cross. And again, it triggered. Okay, we opened higher than the close. So it triggered over the 20. But we still had a sell day. And I don't know if something happened in the market that day. I can't remember. But we still had a sell day. We opened the next day and this thing ripped back up. Now, if I had been watching the intraday chart, I would have taken this off before the move even happened. Now, yeah, I could have got back in, but I would have started this trade out in the hole. But I stuck to the process, stuck to my stop, and it worked out. And look what we ended up making. And you can't beat that. And it's really all simple, mechanical, go, no-go trades. You don't have to research this and research that. It's purely technical. It's a purely technical setup. So, that's why I think this is great for new traders, people that are just starting out. It really helps them understand what it takes. And it can help you build your patience. So if you do move over to day trading, you have the patience. You've already developed the patience that's going to allow you to hold your day trades and you not get shaken out of it. You'll be able to stick to your trade plan. So it can benefit you in a lot of different ways. So what you get now, the first thing I want to say, there's no separate swing service. Everything is all inclusive. Okay, I don't package stuff separate. I don't try to sell classes or anything like that. It's all an educational experience. And you choose what you want. If you just want to do the swings, then just come in. We have the swing trade classes you can take, the trading psychology classes you can take. and come in on Sunday mornings for the live session that we do. And I also go over the daily swing watches, every morning just after 9 o'clock, right before the market opens. So if there's new swings that we're looking at, then we can talk about them then. I do send out kind of like a newsletter email that summarizes what we talked about in the session and gives you the stocks that we have on watch. And then later on that evening, I will tweet out. We have a private member-only Twitter feed that I send out the trade plans on, and I'm going to show you that here in a minute. But it's all inclusive. So you don't have to specify when you sign up. You don't have to say, I don't want this, I don't want that. You just leave it alone. And if at some point you do want to engage in it, then do it. You don't have to get permission or anything like that. All right, so here is, let me see if I can get this up here. All right, here we go. Gonna give you an idea of what some of these look like. All right, so Friday. Here was, on Friday morning, I sent out, these were the stocks that we're already in. My stop was gonna be 61, which was a profit stop because our entry was 59.49, but I wasn't gonna let it get past, because if we sold off yesterday, the day before, which was Thursday. If Friday came and we started selling off, I was going to take profit and we were going to be all cash going in the weekend. That was my idea. But it didn't hit the stop. It recovered and, we did pretty good. Same thing with SRPT. It was the other active swing we were in. I sent out my plan on it, stopped 94. So if it didn't recover, we were stopping out at 94, which was a profit target. And again, we'd have been all cash for the weekend, ready to start back again on Monday. And so as we get, as I hit targets, I'll send out the, if you want to call them alerts or whatever, when I take profit, like on APPS on the 20th, I took half off at $65. This happened to be the same day I got in. It ran to the first target the first day. This doesn't happen often, but it did. So this day was pretty active. I was able to get out half my SRPT and have APPS. So we locked in some good profit that day. And here's an example of one of the trade plans. This is what I tweet out every Sunday night, what the entry trigger is for me, what my profit targets are, what my stop loss is going to be. And I send it out for every stock we had on our watch list. So you see we had APPS on watch. It was an open above 56. That's all I needed to enter. And then my profit targets. But I think 61 was too close to when I entered, when it set up. So I had to divert to 65. So, sometimes we get a gap up and we get in too close to our first potential target. Then we have to just revert to the next one. And that's what we did here. Where's SRPT? SRPT, I was explaining here, not your traditional oversold hook setup, but I'm expecting some news that can drive this to recover at least half the gap now. The technicals are set up for a nice bounce. So we'll be entering on Tuesday on an open over 90.35, and that's exactly what we got. So those are the detailed plans that I send out on every stock on the watch list. Here's Twitter. This is the one I was telling you about. Watching for this, the selling down more to $40 before looking for an oversold bounce. We never got there, so we never took this trade. And there were some other trades that, that worked out pretty good. But that's the feed just goes to the members and kind of tells you what my plans are for each stock. So you can have an idea of what to look for. Now, what you want to do is match it up on the chart yourself. Look at it. Put the points on the chart and look at it and say, well, and if you can't understand why I'm taking profit at a certain level, that's when you get on the email and ask me, why are we taking profit here? Why did you pick this? I think it should be here, or I think it should be there. This whole the process of learning. That's what this is all about. So, I hope this helped explain a lot of what my swing is about, my swing trading is about. Like I said, there is a earnings swing that I do. When you get the fundamental stuff down, I'll share with you the more intuitive type trades, where we get in and we kind of pair up with the technicals and we try to trade this ahead of earnings. So, that's another facet. So you never get stuck anywhere. There's always room to expand and to grow. So if you guys have any questions, just shoot me an email, ed@AverageJoeTrader.com, and I'll be happy to answer them for you. But hopefully you understand now what this swing trading is all about. So when you see me do a recap or something, you'll have a better idea or a better reference point. So have a great rest of the weekend, and I'll see you guys in the jungle on Monday morning.